Amazon stock is correcting within a longer term bullish trend. Yesterday, the 28th of September, it closed at $125.98, and currently it is at trading at 126.35 in this post-market session. 54 million shares have crossed the table already. What we have here is that the folks at Morningstar saying that they're maintaining a fair value estimate of $150 per share for wide moat Amazon, as the FTC was joined by 17 state attorneys general in filing a lawsuit against the company for a variety of alleged anti-competitive practices. Their initial opinion is that a settlement is the most likely outcome, with a fine being levied and possibly some minor changes in business practices. And they are highly skeptical that Amazon will be broken up. They are not confident that that will be the case. The shares still appear modestly undervalued to them. The legal filing seeks unspecified remedies, but appears to skew towards structural changes rather than fines, and may seek to break up Amazon. Okay, so they struggle. They're saying that they're not, like I said earlier on, they're finding it difficult to come up with a recent relevant precedent for doing so, as US courts have been applying a framework that revolves around consumer welfare for more than 4 decades now. So in this case, it is difficult to see how an Amazon breakup would clearly benefit US consumers. Yes, it makes sense, because Amazon is crushing its competition and lowering prices, I believe, for the consumers. They are crushing the competition, and they're not crushing the competition to increase prices. They're crushing the competition to keep lowering prices. Obviously, that's the drive, to lower prices and then maintain dominance and maintain corner the market, and consumers benefit. So regardless, they think this legal matter will take years to wind its way through the courts, the US courts. In the highly unlikely event of a breakup, it is possible that new investors may focus on certain parts of the business, like AWS, and the sum of the parts might be greater than the whole. However, their wider moat rating around the retail business is based on cost advantages, intangible assets, and network effect, and would clearly be threatened depending on the exact nature of a theoretical breakup. So this is this is the opinion of the folks at Morningstar, and I, to a great extent, agree with that. It makes sense. There'll be other opinions out there. So as of the 14th of September, Amazon stock reached the high of let's get it, $144.85. So almost close to that $150 target that they have. So yeah, if you say the stock is undervalued, I can understand why you're saying that. So the stock has since pulled back, just slightly above. Yes, pulled back and broke through a lot of support on its daily chart. So it's the fact that it has done so is yes, just confirm that maybe further retracement would occur, and it did occur. It did occur when it looked like it was going to move sideways on Monday the 18th. About a week ago, more than a week ago, it continued to break through these resistances from its moving averages, and when it continued to do so, that was just a confirmation that it was going to retrace further, and it did, and continued to retrace to where it is right now, as at $126 or thereabouts. So where it is right now, there's a downward projection of 124.72 on this daily chart. On the upper projections, there's an upper projection of 132.65, and then there is above that there is 135.57, there's 138.08, there's 139.12, there's 140.79, 143.67. Then there's 153.95. So this algo is the algo we're using in this in forecasting this Fibonacci, calculating this for the Fibonacci projections, probably seems to agree with what the folks at Morningstar are saying. But outside that, there are also downward projection. There are support. There's actually more support all the way down to where some of these moving averages are 118.46. It's 100. These are the sort of levels where it was as of June. So 118 wouldn't be a big shock as such, but it's something that can happen. 118, and there's 114 as well. Around May, I want to believe it was around May of this year, was trading at such levels, 113.24 and 110.94. So let's look at the the 1 week chart and see what the projections are saying there. Yeah, on the 1 week chart, there's the auto regression for its. I believe this is it the 10-period moving average, 10-week moving average is forecasting that the stock is going to show weakness by 6th of November. It's going to be at the 10-week moving average will be at 90.18. That would be really harsh, but who knows, and then there are upper projections. There are projections, and they're up and down on this 1 week chart. There's 101.96. There's 117.82. There's 123.71. There's a down projection just slightly below where it is, 123.71. That's the one. But there are upper projections. There's 127.79. There's 130.96. There's 134.13. There's 137.75, 144.10, 160, 159.95. So see what you make of Amazon stock. The company is being challenged by the FTC and 17 attorneys general in the US, trying to seek its breakup. But the folks at Morningstar have not really seen any precedent in that regard, and they are quite not very confident that can actually happen. Yeah. So see what you make of Amazon stock, and I'll definitely continue to update you. Thank you very much for watching this video.